Hi, I'm Mike Turner. I've developed a set of rules that I call my 10 essential rules for beating the market. Rule number 10 ties everything together. This shows you how you can bring the technicals and the fundamentals and the insider buying and selling and the institutional ownership, the sector and the industry, and pull it all together, and how to look at a top-down as well as a bottom-up analysis of the stocks that you might consider owning. Rule number 10. This is kind of the rule that wraps it all up and pulls it all together. It's all about timing the market. Now, you have probably been told at least sometime in your life that you cannot time the market. In fact, you may have been told that if anybody says to you that you can time the market, that you should ignore that person, run away from them as quickly as you can. And if you happen to believe that, you don't want to hear the rest of this tape, because I believe that you can time the market. Further than that, I believe that if you don't try to time the market, you will lose money in the stock market. But timing the market is not an overly difficult task. And I'm going to walk you through the process that I use that you can do as well to time the market and make your entry points and exit points in the market far more timely and make yourself a lot more money. And here's how it works. First of all stocks, all sectors, all industries, they will trend higher or trend lower or trend in a flat range or in a trading range. There are trends that develop. The key is whether or not you believe those trends have got any longevity to them. If there is a trend that has developed, how long will it continue? Well, stocks have momentum behind them. They don't just change from day to day instantaneously. They will trend to move or tend to move higher on a trend. They will tend to move lower on a trend. And there's ways to chart that and to watch that over time. So here's what I like to do. Here's an overview chart, if you will, that I'm going to pull up on the screen for you to look at. At the very top of this chart, you'll see the stock. And there are really only two lines on this chart. It's very easy to understand, very easy to read. There is a blue line. That blue line is a 10-week moving average that has been time shifted forward 3 weeks. Now let me get into that a little bit, because I don't know of anybody else out there that does this. What I have done, I have developed a methodology that takes the Friday closing price and charts that over time, and also creates a 10-week moving average based upon that Friday closing price. Then I take that price and I shift it forward 3 weeks in time. Now what that does is it puts a little more distance between the actual movement of the stock and the trend line. And when that stock actually crosses that trend line, it gives me a stronger buy signal or a stronger short sell signal if I have time shifted that particular that trend line. And it's not a difficult thing to understand. A lot of people say, well, how do you time shift? That kind of science fiction kind of thing. No, it's easy to understand. Think of it this way. You know how to plot on a graph the Friday closing prices. Easy to do. Plot, plot, plot. At the end of each Friday you put that closing price on there. Okay, that's easy to do. Then you calculate the 10-week moving average. You just take that Friday plus the last 9 Fridays, add them up, divide them by 10. Easy enough to do. Plot that put that dot on your plot. But before you put that 10-week moving average price on your chart, let's pretend you've got a piece of plastic that you're going to lay down in front of your graph. And you put that dot on that piece of clear plastic. Okay? So now you're going to chart the 10-week moving average. Now here's how you time shift it. Take the piece of plastic loose, move it forward 3 weeks. That's all there is to it. It just shifts that blue line forward 3 weeks. Gives a much stronger indication of when to get in a stock, either long or short. Now right below that, I look at the insider buying. Insider buying is critical. You can see in this chart, this example that I'm showing you, that there was some insider buying right at a recent low. And if you bought right here, and you'll notice on the chart that's at the top, when the week ending closing price goes from a black color to a green color, it basically means it's given a new buy signal. And notice that buy signal follows or is after that insider buying. And it's a great time to be looking at that stock. And I talk about that in other rules in the 10 essential rules. Now, right below that is the institutional ownership. And I like to be able to look at that institutional ownership and whether or not its institutions are increasing or decreasing their ownership in shares of stock. It's a great indication as to whether or not that stock has got momentum behind it. Below that is really you. Below that is the volume that the average investor is putting into that stock, whether it's moving up or down. I like to see an increasing volume. And down below are probably two of the most important charts on the entire screen that you're looking at, and that's the sector and the industry. I chart the average price, and again, this is something I don't think anybody else out there does. I take the average price of every stock in this particular stock's industry, and I chart that over time, and I chart that against a 10-week moving average, its own 10-week moving average, time shifted to 3 weeks. I do that for the industry, and I do that for every stock in that stock's sector, the average price, and I chart that over time. Now, when the stock's price, the industry's price, average price, and the sector's average price crosses its trend line, it moves into what I call bull mode. If it crosses it moving up. If it crosses it moving down, I call that bear mode. Now, think about this. Notice at the very top of the screen you're looking at that the fundamentals of this particular stock are rated a strong buy. That means in rule number 1, I've gone through and I've scored and analyzed the fundamentals, the growth fundamentals that we talked about in rule number 1. And I have determined that this is a strong buy rated stock fundamentally. And now notice that the technical is long or green shaded, and that means the composite, which I take and combine both the fundamental and the technical to come up with a composite rating on this stock. The stock itself is a strong buy. Now what that means is that the stock is moving up and it's crossed its trend line. The insider buying is at a recent low, and that's pushing the stock higher as well. The decision to buy that stock higher. Right below that, you can see that the institutional ownership is right in what I consider my sweet spot. The volume is increasing. The industry has moved up into bull mode. The sector has moved up into bull mode. And remember this, the sector and industry have about 50% to do with the pricing movement of the stock. Now think about this particular stock. Why would you not want to own it? The sector's moving up. The industry's moving up. Insiders like it. The institutions like it. The stock itself is moving up. The general investing public like it. All of those reasons are positive for this stock. This is the kind of analysis that you can do, decide whether or not you want to buy a particular stock or not. You have now narrowed the universe of stocks down to the few that meet this criteria. And the odds of you making a lot more money with this stock than another stock that you might buy that has maybe good fundamentals, but maybe the technicals aren't where they should be, maybe the sector or the industry isn't where it should be. This puts a lot of things in your favor that would tell you that the stock is likely to continue moving higher. And here's what I mean by likely to continue. Since I'm buying a fundamentally strong stock, it tends to have a certain momentum to it. It's not a thinly traded stock. It's not which means there's not a lot of volume. It's got good, strong fundamentals, which don't change overnight. Fundamentals on stocks don't change overnight. And so there is a tendency for that stock to continue moving in the direction that it's going. It has a tendency to continue. If it's in an upward climb, it tends to continue that direction. Those are the kinds of stocks that you want to buy.